I'm going to show you all a very basic technical strategy that can be used across timeframes regardless of whether you're scalping, day trading, swing trading, or even position trading. So this basic strategy it works equally the same across timeframes, and if you use it in conjunction with different timeframes, higher timeframes and lower timeframes, then it can help you catch what most people call quote sniper entries. You can use this strategy to greatly reduce your risk and also increase your returns by placing your stop loss on lower time frames, catching those sniper entries on lower time frames, and then placing your TP levels on higher time frames on higher time frames. And many of you may have heard this strategy, and it's called the break and retest strategy. It's the simplest technical analysis strategy that is used by beginners and even advanced traders. But I would also like to make note that it is as essential to understand that no one type of analysis is better than the other. Trading in financial markets is like sitting on a three legged stool. You have technical analysis, fundamental analysis, and market sentiment analysis. With even one leg missing, you'll be quite unstable, and that can cause you to incur losses that could have been easily managed, and then rolling into a weaker trading psychology and even poor risk management. I'm not saying you have to be proficient in all three areas, but it is beneficial to know about them and have a basic understanding of what each of them are and how do they affect your trades and how do they affect the financial markets. So let's get into the simulation of this break and retest strategy and learn how to earn some great returns from just technical analysis. If you're not aware of what break and retest is, and if this is your first time hearing about it, or you're a beginner and you're just starting off, break and retest is a technical analysis strategy, which means that every time price breaks a resistance or support, or even creates a resistance or support level, price will always come back to retest that broken or created level to confirm its direction. Many of you, and myself included, when I started Forex trading about 4.5 years ago, would have encountered a scenario where there is support or resistance level being broken, and you think that it's going to continue in a direction, but it ends up reversing and comes back and takes you out. And these are what we call fake outs. So this break and retest strategy actually helps you minimize those mistakes, and it helps you take trades with proper confirmation. It's pretty simple. All you need to understand is what support and resistance levels are, and then this break and retest, I'm going to show you exactly how to use it. We're going to start off with higher time frames. So whether you're scalping, swing trading, day trading, whatever it may be, always look at higher time frames and then go down to lower time frames to find your entries. So we're going to take a look at the daily time frame where clearly there's a support level that's being formed down here at 123,400. And what this tells me is that on a higher time frame, on a daily time frame, if price is creating a support and we see some bullish candles close, there's a very high chance that we're going to come back up bullish. So if your goal is to simply catch those 10, 15 pips as a scalp, it doesn't necessarily matter whether you're taking trades that are retracements of the trend or anything like that. But if your goal is to turn those scalp opportunities into day trades or into swing trades or into position trades, you want to make sure that you're on the right side of the trend. So if you're new to Forex trading, or just trading in general, because market structure is pretty much going to be the same across time frames and across assets, whether stocks or anything like that. You're going to look at uptrend and downtrend. So the first market structure is an uptrend where price continues bullish, comes back down to retrace that bullish movement to correct it, and then continue bullish here again until market structure is broken, where price returns back down and it starts making lower highs and lower lows instead of higher highs and higher lows. So the support being made and the price creating a resistance right up top here, creating a high, pulling back down. This is called a higher low, right? And then as it breaks above and continues bullish, breaking the previous highs is a higher high. So this is your uptrend. Your uptrend is broken as soon as price comes back down and starts breaking the low of the previous uh, higher lows or higher highs that are being made. So as price continues down, you have a support that's being made, pulls back up. Now this is called a lower high, and as it continues down in order to break the previous low, that's called a lower low. So you want to make sure that you're following the market structure, you're following what the higher time frames are telling you. And so in this case, clearly there's a support that's being made and price is trying to continue bullish. We are breaking above kind of this minor resistance that's being formed here. So as price continues bullish, I know that I'm going to be looking for some formation of this to the upside. So I know that I'm going to be looking for this 123,500 area to be broken and then retested in order for me to look for a buy opportunity, the upside. So I'm going to place another line right about here. And I clone that. So then when we drop down to lower time frames, we're going to see how this 4-hour time frame is pretty much showing us the same exact structure that we saw on a higher time frame on the daily time frame. On 4-hour, we see a downtrend, we see a support being made, a high being made right here. As price continues back down, it creates another support, pushes back up to create another high, and then pushes back down to make another support level down here. Then here, as we're in this downtrend, we see that price starts pushing up. It creates that support. It creates a higher low here. As it's continuing up, it's starting to break the highs. So we had a high here. The next high broke the previous high, pulls back. It's respecting a support. And now if price continues bullish, then we want to see a retest of this 123,500 in order for us to target potentially this 124,400 zone right about here, this consolidation area. So you have consolidation right here. There's really nothing stopping it once price breaks out of this area right up top, and then also when price breaks out of this, right? So once price breaks out of this zone, there's really nothing stopping it from coming back and tapping into 123, 960, 124 area flat. And then as it continues bullish, then there's nothing stopping it from tapping into 124, 400. And so that's how we're gonna, this is pretty much how we're gonna determine where our TP levels are going to be, and then also use lower time frames like the 30-minute and 15-minute to take the entries and place our stop loss to maximize our risk to reward. So I'm going to go ahead and draw some lines here. So you have that 4-hour level right up top, and then you also have that zone resistance level right up top for that consolidation. So you have the consolidation support and that resistance right here, and then you also have another resistance. So once this is broken right up top, right here, once this is broken, then there's really nothing stopping it from tapping into this overall area of 124,400. As we drop down to the 1 hour, we see something similar where price is respecting a support. So you have a high that's being made right here. Price comes back, taps into the same exact area, respecting a support. So once it breaks above, then you have that little bit of consolidation. Once it breaks above, then you want that area to be retested and then continuation bullish with our first partial level being at 123, let's say 900, and then another break and retest to continue bullish with the next one being at 300, and then ultimately tapping into 400 area. Dropping down to the 30-minute, same exact thing, and the 15-minute. So let's see how can we take this trade on a 15-minute or a 30-minute time frame and then run it in accordance to the 4-hour TP levels. So now we're seeing that price is kind of fluctuating right about here. We want to see some bullish candles close, and then also once it breaks above, then we want to see a bearish candle close to continue bullish. So we have certain areas that we're going to be targeting here. That's another resistance that we have looking to the left. You have that resistance of that consolidation. So we want to see some bearish candle closes right up top, or if price continues bullish, and you're going to see that happen a lot, something similar to this. If it just runs bullish, then I want to see another break and retest up top here in order for me to take an entry. So you have that bottom wick rejection, and now price is continuing bullish. Now all we're waiting for is a bearish candle close. So we have that bearish candle, price is continuing bullish. This is pretty much where I would look for that entry for the upside. So What I use is risk percentage, so I don't necessarily go for a, specifically a $10 lot or $50 lot or anything like that. I use risk percentages. So if you have a smaller account, one tip if you want to grow your account, whether it's a $100 account, $500 account, $1,000 account, never risk more than 3% on any given trade. So always risk between 1 to 3%. Ultimately, you want to grow your account enough when you get to $5,000 or $10,000 where you are able to risk 1 to 3% of your previous day trade profits. And so that's pretty much what I do now, where I risk only 1 to 3% of my previous day profits. I do not risk 1 to 3% of my account because 1 to 3% of a $500 account or a $100 account is much less than 1 to 3% of a $10,000 account, a $50,000 account, or a $100,000 account. So we're going to go ahead and risk 2% on this one, and I'm going to reserve that 1% of risk that I can input into a trade for my second attempt. So I give myself 2 attempts per trade per session, and that way, if my first trade, for example, goes into profit, then I'm able to move that to break even, move it to a trail stop loss, pretty much make it risk free. So then now I have 1 more% available for me to risk. So I'm never risking more than 3% on any trade or any session. Here, since price is breaking above some resistance levels and some support levels from the past, I'm going to keep my stop loss just a couple of pips below the support that it's made here. So let's say 123.615. And then TP, let's do 124 right into that area. So let's do 124,400. And obviously we're going to take some partials along the way. So greatly reducing your risk compared to your reward. It's about a 5 pip, 6 pip stop loss, pretty tight, but you have that confirmation already, and then continuation up for about 74 pips. So you have that confirmation here from this break and retest. That price is going to continue bullish, and so we're just gonna wait for that confirmation to the upside, and then look for some more scaling opportunities. So here, price showing a lot of volume. Now, when the next candle closes, or whenever the candle closes bearish, I'm going to look to take partials and then also try to move to break even to make this trade risk free. So we're tapping into some partial levels that we had discussed. So somewhere here, close part. So it's very subjective. How much do you want to close? Since we had lined up about 1 and 2 levels, so I'm going to take 25% here, and then I'm going to take 25% at the next level, and then let 50% run. So it's pretty subjective. You could do 50% right now, and then uh, let the price run until your TP level, and then maybe take another 25% or anything like that. It's completely up to you. How do you want to manage that trade? But I'm going to do 25% right now, and then I'm going to do 25% later. And I'm also going to move to break even, so not fill the stop loss just yet, but still be risk free. And the reason why I closed partial, tapped into that level, and also now we're seeing a lot more bearish volume here. Another thing is for that week, if whenever I'm planning out my week, my trades and all of that, my goals, instead of putting them into dollar amounts, I put my goals into equity percentages. So my goal is, for example, I want to turn a scalp into a swing trade. So by the end of the week, I want at least a 50% equity increase, or 100% equity increase, or a 200% equity increase. So that is definitely possible, and a lot of people have done it, especially part of SharmaFX. Any of those people can let you know. But A lot of these people, it is definitely possible to do a 200% equity increase within a month, right? It's definitely doable within a week as well. It depends on, again, reducing your risk, taking trades with confirmations, and then letting them run as much as possible. Now here, if this price makes a support and continues bullish after that, then I would take a trade, but I would want the first 15-minute candle to close bullish here, and then the next one to continue in order for me to take a trade. Another thing is when I'm talking to a lot of my trader friends who mostly just do scalping. So for example, now we're gonna break above here. So I'm gonna look for another scaling opportunity and risk only 1% on this trade now with, since we've already made a support down here, let's do 760 flat. 123, 760 flat as stop loss, and then TP the same exact thing. So when I'm talking to a lot of my trader friends who scalp a lot of their goals are every trade that they take, every day that they're taking a trade, every session, any of that. Their equity percentage goal is 1%. They only want to make 1% equity increase per trade per session. And so by the end of the week, they have a 5% equity increase. So if you're one of those people and you're able to use the strategy in conjunction with higher time frames, as you can see, you pretty much hit that weekly goal in that one trade. And now coming in with our second scale in, obviously you're going to be hitting 2 to 3 weeks worth of goal just in two trades, just by using lower time frame and higher time frames together. So definitely like plan out your week, plan out, do you want to take a scalp into a swing trade, into a day trade? And that's really going to force you to look at opportunities, to look at levels, and to look at your trades again, give it a second chance, and understand that if price, for example, doesn't break out of a consolidation, I don't have a trade. If price does, X, Y, and Z, then I'm going to take an entry. Or if price fails to give me the confirmation that I'm looking for, in this example, if price fails to give us a break and retest and it simply continues bullish or bearish, then we don't have the confirmation for that trade. So we won't be taking that trade. So setting out guidelines for yourself, and these things could also be part of your trading plan. So always have a trading plan as well when you're trading in Forex or whether it's stock market or anything. So I'm going to skip through just for the sake of time. And now we're continuing bullish here. So if this was not enough confirmation for you, if this was something that you were hesitant about, then you have another confirmation right up top here to continue bullish. Looking at this on different time frames, on a 30-minute, you have a break and retest. We're starting to tap into, coming pretty close here, as you can see, with a lot of volume into these resistance levels in the past. 1 hour time frame, huge bullish move. And so once we're done with this trade, once we tap into this 124 300 and we go completely risk free and we trail our stop loss, we will be done trading for this session. But also know that later in the day or later into the session, price will try to come back and try to correct its move, whether it's through consolidation. So in consolidation, the market collects orders, it generates liquidity. So whether it's through consolidation or an actual retracement of this movement down and then a bullish run up. Looking at the 4 hour, again, a lot of volume. This 4 hour candle doesn't even have a bottom wick. So this tells me that in this entire 4 hour time frame so far, price hasn't even tried going bearish once. So there's a lot of volume, but we know that price is going to try to correct itself soon. Same exact thing with the daily time frame, more than 50% of correction of this entire push down. So we're seeing another correction. We're seeing some uncertainty where price is breaking the lows and the highs. So this is again here at where I would look to take partials. So close part, close 25% here, and then move to break even. and also trail the stop loss from the initial trade, which is right here. So trail that to 123,900. So right up there with our second scale and or our scale and opportunity, our second entry. So now we're seeing obviously price reacting to that 124,300 area, which is right that consolidation to the left. 1 hour consolidation here again, and also on the 4 hour time frame. So at this point, you could also trail your stop loss a little bit higher so that, for example, if price breaks below this area, let me go ahead and annotate here. So this level right about here where price made that support with a candle close and a bottom wick rejection. So if price were to come back down and continue down, then it would take us out. But also this would mean that there's either a correction of this entire move or we're going to continue further down. So correction or further down or even consolidation into this area to continue bullish and collect those orders. But any of those. So let's say we go ahead and trail our stop loss to 124.03 for both of these. So right there, and then same thing here, 124.03. So now we're saying that if price breaks below this, then the chances are it's going to continue bearish and pretty much take us out of the trade at that point. So we're seeing that it's still rejecting that 124,300 area. Now we want to see, is it going to break above and go right into that consolidation area, or is it going to continue bearish and come right back down? So it seems like it's consolidating a little bit here. So there's two things that you can do here. Either you close out the entire position because now price is consolidating right underneath 124,300, or you wait for price to continue bullish and then hit your TP level since you're already risk-free at this point. So we're seeing price pull back, pulls back, and now if it breaks below this, respects this, any of that, then we're pretty much out of the trade at that point. Hits our trail stop loss. Now it's consolidating here. Very big chance it continues back bullish because now we're seeing that the candles are not closing below this support that we had marked here, right? So regardless, just in those two trades, just in this session, we had about a 16% equity increase. And now we're going to wait until the next session. So we're going to go ahead and skip through this. We're going to look at the next session for the next day in order for us to take an entry. So now we've corrected this entire move. We've corrected this entire bearish move to the left and also on that daily time frame. We're starting to make some top wick rejections. We're seeing some consolidation here again. I'm going to use the same lines here where price is failing to break above a resistance level. You have a support that's being formed right down here as well for this consolidation. So if price breaks below that, then we can look for potential sell opportunities. So still just waiting for price to kind of react to that area. So it's finally breaking below. We want to check the 30 and the 15-minute time frames, wait for a break and retest, clear out of this consolidation here to the left, and then we have a very nice sell opportunity to the downside. So I want to see as price is breaking below here, I want to see price, actually let me go ahead and adjust this one right about here. So what I want to see is price closing bullish and then continuing back down. So we're getting some pullbacks here. We're getting, if price can continue back down, then that would be a very nice trade to the downside. So we have a gap down, got a bullish close. And now if this candle can break the low here, then we have a very nice sell opportunity. We have a bearish close, price still rejecting that 124, let's say about 700 area, 0.695, about 700 area. Let's see if we can continue bearish. Comes right back into the zone, so we don't have a confirmation yet of a buy or a sell. So you have one fake out, two fake out right there. Price still consolidating right into this zone. All right, so now we're starting to, it seems like, break down. So this is pretty much where I would look for that sell opportunity. Now here, price has already respected this resistance of 124,700. And now it seems like it's going to continue back down there. So either we wait for that or we wait for price to give us another break and retest. So at this point, we have the confirmation. So I'm going to go ahead and take this opportunity to the downside. So now here, I'm going to start off with a 2% risk. And if we see another scaling opportunity, then we can scale in. So here, I'm going to place the stop loss at 124. Point, let's give it 7.1. So enough room kind of here. So 7.1 right above this 700 area or 0.695 area to give it enough room if it wants to come back and kind of respect that area again, but still keeping it tight enough that if it breaks above this, chances are it's going to consolidate or go the other way, and we obviously don't want to be a part of that. So 7.1 with, we have a 4-hour correction that is due here. So we're going to take a look at what are some levels that we know that price has to come back and still correct, right? So we're going to look at some previous support and resistance levels. So here, for example, we'll target first. Let's go ahead and use the same exact line here. So we'll target first right into the support level of, let's say, 124 or 124 100, and then as it continues even bearish, then we could look for some more other opportunities. But so far, even if we took our entry here, this would be about a 40 pip trade. So 124.100. So here you have a 20 pip stop loss with about a 40 pip TP. So that's 2-to-1 risk to reward right there. And then also you can modify it as we get more break and retest opportunities, or we get confirmation that price is going to continue lower, then that would be subjective again. You could modify that according to your comfort level. The price continuing bearish. Now here you have another break and retest. So again, as price continues down, now at this point, I would look to obviously look for some lower TP levels. So now let's say looking at 4-hour time frame, we could essentially target 124 or 123, let's say 700. So now 1% risk with 123.700, and then your stop loss here, price, since price is making another break and retest to continue back down, then looking at exactly where can we take a trade where our stop loss would be or our risk would be minimized. So in this case, it would be pretty much, let's say right about here. So price shouldn't necessarily continue any higher than that. So let's say 124, let's put 0.56. Right about there. So this is from entry to stop loss 14 pips, coming down for 70 pips. So we're getting some more break and retest, continuing down, getting some pullbacks. So first TP hit, now you're up about 23% for the week. At this point, since we have now some bullish candle closes, we could look to take some partials or even trail the stop loss. Since it's only 1%, I'm just going to go ahead and trail the stop loss right above this pullback that we have. So let's do 124.33 flat. You see some consolidation, pullbacks, consolidations here again. Price clearly wants to continue back down. Let me zoom out here. So since it's consolidating so much, again, you could look to trail your stop loss even further down or take partials. So I would just let this run since it's simply just consolidating. Let's do 30 minutes. So it's not the reason why I wouldn't take partials, or it's not really, making me too worried. It's because we're still respecting that 124, 100 area as resistance at the moment. And that is another TP hit. So far for the week, we are up 27% here by taking 1, 2, 3, and 4 trades. By simply taking 4 trades, 4 scalp opportunities, placing our TP levels based on the 4-hour time frame and our stop loss based on the 15 and 30-minute time frame, and only risking between 1 to 3%. You're up about 27%, and you flip that $500 account into $637.20 in just 4 trades and within a week, right? So this is the break and retest strategy, still using the support resistance level, simply just that, and simple technical analysis. So if you're starting off, definitely I would recommend using this strategy. Super simple. You could use it on any time frame, whether it's 4 hour, 1 hour, 30 minute, 15 minute, as we saw right now. Just when we're switching through different time frames, we saw break and retest across time frames happening here. And also, it's a great way to also practice how to minimize your risk. If you want to be successful in forex trading or in trading or investment in general, you always want to focus on your risk. Where can you minimize your risks the most? And then ultimately that's going to lead to greater risk rewards. So I hope this video was helpful.